Welcome to The Explainer. Today, we're going to break down the chart for Amazon stock. And honestly, it's telling a fascinating story. A real tug of war between the people who think it's going up, the bulls, and the people who think it's going down, the bears. So, let's figure out which side might have the edge. So, that's the big question on everyone's mind, right? Is Amazon a buy or a sell? Well, right now, the chart is sending some seriously mixed signals. Our job in this explainer is to decode that technical story and really get a handle on the key forces that are pulling this stock in completely opposite directions. Okay, first up, let's set the scene. Amazon stock isn't exactly soaring, but it's not plummeting either. Right now, it's kind of stuck in this holding pattern, which tells us the market just can't make up its mind. What you're looking at is what analysts call a consolidation phase. All that really means is that for the last 3 months, the buyers and the sellers have been in a total stalemate. Neither side can get the upper hand, and that's why the price has been just stuck. And here are the actual boundaries of that fight. The stock has basically been bouncing between a high of, let's say, $239 and a low of around $202. You can literally picture this as a box that the price has been trapped inside for months. All right, so with that context, let's look at the bearish case. These are the technical warning signs that are kind of screaming, hey, be careful. They're pointing to some potential weakness, at least in the short term. But before we get into the nitty-gritty numbers, you gotta understand this one concept, the moving average. It sounds complicated, but it's not. It just smooths out all the crazy day-to-day price swings so we can see the actual underlying trend a lot more clearly. We're gonna look at both short-term and long-term ones. And right here, this is the first problem for the bulls. You can see that as of early October, the stock's actual price was trading below its 20-day average. Now, that's a classic sign of short-term weakness. It suggests that recently, the sellers have been winning the fight. And it's not just that one little signal. A whole bunch of other technical tools that measure things like momentum are also flashing caution. On top of that, trading volume has been kind of low, which might mean buyers just aren't that excited at these prices. So when you put it all together, it definitely paints a picture of weakness for the stock's immediate future. Okay, but that's only one side of the story. Now let's flip the coin and look at the bullish case, the signals that are giving the optimists out there a real reason for hope. And this is the key. The whole argument here is that if you just zoom out and ignore the day-to-day noise, the story completely changes. That shaky short-term picture, it's sitting on top of a much more solid long-term trend, which suggests some real underlying strength. And here's the proof. Look at this. In total contrast to that short-term picture, the current price is sitting comfortably above its 200-day moving average. For a lot of traders, this is a super powerful sign that the stock's long-term health is still looking pretty good. You know, this quote from the analysis just nails it. It really gets to the heart of the whole thing. It captures that entire conflict we're seeing. You've got this short-term weakness fighting against this long-term strength. And that is the central drama playing out on Amazon's chart right now. So now that we get the two opposing forces, let's make this practical. The analysis points to specific battle lines. These are the key price levels that are going to tell us which side is actually starting to win this war. So the first key level is something called resistance. Honestly, the easiest way to think about it is as a price ceiling. This is the level that the bulls absolutely have to smash through to prove they're back in charge. And that ceiling is sitting right around $225.90. And that's not just some random number, right? That's that 20-day moving average we saw earlier. So if the price can push decisively above this level, that would be a very, very positive signal. And you guessed it, on the flip side, we have supports. If resistance is the ceiling, then support is the floor. It's like a safety net that's been holding the stock up. This is the critical level the bears need to break. That floor is right around $214.50, which happens to be that big, long-term 200-day moving average. So if the stock were to fall hard below this level, that could be a major warning sign that a much deeper drop is on the way. So this really all boils down to 3 possible scenarios from here. 1, the stock could just keep going sideways, bouncing between that floor and that ceiling. 2, we could see a bullish breakout, where the price finally smashes through that ceiling. Or 3, a bearish breakdown, where the price finally crashes below that floor. All right, let's wrap this all up. What's the final takeaway from all this technical analysis? Well, for now, the analysis suggests that the most probable outcome is more of the same. That tug of war is probably going to continue, with the stocks staying trapped in that range we've been talking about. It seems neither the bulls nor the bears have shown enough strength to declare victory. At least, not yet. So the big point here is this. The takeaway isn't to bet on your direction right this second. It's to watch those key levels like a hawk. A decisive move above that ceiling or below that floor, that's going to be the big signal that tells everybody which side has finally won this battle. And that really leaves us with the million-dollar question, doesn't it? The battle lines are drawn. You've got the ceiling up there around 226 and the floor down there at 214. The entire market is just sitting here watching and waiting to see which one is going to break first, because that is likely going to dictate Amazon's next big move.